What's going on, everybody? My name is Zach Hartley, and in this video we are talking about the risks of trading options. This is definitely one of the most important lessons in this entire course, so I highly recommend that you pay close attention and dive into some of the topics that I talk about in this video with a little bit more detail in your own research. So without any further ado, here we go. Just up front, I want to get this out there and say that options are much more riskier than buying and selling stocks. They're much more complicated and difficult to understand than buying and selling stocks, and they are much more volatile than buying and selling stocks. So there are a lot of challenges that come with options, and they can be quite complicated and quite overwhelming. There is a case with a gentleman, his name is on my screen, and if you're not aware of his name or the case surrounding him, you definitely need to look into it and do some research on it, because it is something that you need to be aware of, and you need to understand what you are doing, because if you do this wrong, or you make the wrong trade, or you think you're buying options when instead you're buying contracts, you can really do some damage to your personal finances, your family situation, and a lot of other cases as well. So definitely pay attention, and if you're not aware of that situation that I'm talking about, you definitely need to look it up. Next, simple rules. These are rules that I personally follow. These are a couple of things that I would recommend you follow, and they're just there to help you mitigate your risk, not put too much money out there, and to manage your own mental state, your personal finances, and your real money. So simple rules that I follow is don't trade options if you cannot afford to lose it. Options are very risky, they are very volatile, and they will drive you nuts if you are relying on that money for an income, for food, to put shelter over your head. You will go absolutely crazy trading options. So if you cannot afford to lose the $1,000 that you're putting into this trade buying options, do not do it. Just straight up, do not do it. Take $200, $300, put it in cash and save it for yourself, and buy some Apple shares or some Wells Fargo shares or some Berkshire Hathaway. Buy something steady and stable that has some value to it, and save your money. Do not buy options if you are relying on it for income, for food, for shelter, for anything crucial. You will go absolutely crazy. Secondly, make sure you understand the trade. I have walked through a simple call option and a simple put option. They're the most basic options that you can buy. You can also combine them in a variety of different ways, but you need to make sure, more so than anything, that you understand the trade that you are getting into, and you understand how that option works and how many you are buying, because if you do not understand that trade and it goes the wrong way, it will frustrate the hell out of you. It will cost you an exorbitant amount of money. It will discourage you, and it will be extremely difficult to come back from that, and it is the last thing you want to have to deal with, when you could have done a little bit more research and not made that exact mistake. Third rule, this is one that I strictly follow, especially for my options trading, is I only put a 5% maximum position into any option. I have a diversified portfolio, I have a number of stocks, I also have a number of other investments, and therefore I only ever put 5% of my total holdings into one single option. That keeps my entire risk of that option very low. It keeps my total cash going into that option very low, but I trade options because it gives me a great return when I'm right. So a little bit of both worlds there, but do not put 20, 30, 40% of your portfolio into one single option, or even two or three options, because it is way too volatile, way too risky, and it is not the right way to invest your money. Second last thing, focus on long options. Long options are the easiest to understand, they're the easiest to manage, they have the lowest risk in terms of your actual basically downside, and the market is usually going up. 90% of the time the market is going up. So if you are buying short options, you are buying put options, you are going at least against the market, or at least against a stock, and so you need to be very certain of your position if that is going to be the case or the position that you take. And lastly, do not execute the options. This is my personal recommendation. I buy and sell the options, and I trade and usually sell them before the expiry. I'm usually almost always out of that position at least a couple days before the expiry, so that I do not have to outlay any cash in order to execute the option. That way I don't have to pile up a big pile of cash. I don't have to worry about outflowing it, and I can get in and out of those shares as I want. The nice thing about options is that they are very sensitive to pricing, and if you are trading that stock 2 or 3 days before the expiry date and you are already in the money and you're up on it, you might as well just get out of it and start looking at the next one, because you're going to save yourself some time and some cash on the transaction. So that is my personal recommendation when you are trading options, is to buy and sell them before the expiry date. Do not execute on them unless that is part of your strategy for getting into a company. Risk and return. This is something that's really important. You need to understand your upside versus your downside. You want to try and make sure that your upside is larger than your downside, or at least the multiple on it is bigger. But when you're going through your charts and you're doing your technical analysis, figure out what is the maximum I'm going to lose before I'm wrong compared to what does the upside look like on this stock. So I just bought a share in Aphria and I had a stop loss in it. It's doing really well, and I'm going to walk you through that a little bit later, but my downside on it was only 5 or 10% and my upside was absolutely huge. So I really liked that trade. Secondly, you should trade with a stop loss. If you are trading options and you have the option of trading with a stop loss, you should probably do it to reduce your risk and make sure that you don't lose your entire position. Thirdly, you can hedge your trade. If there are other companies that you could hedge your trade with, or if there's another way to maybe short the company or buy it on the other side, you should consider hedging your trade to reduce your risk, especially if you're not going to have a stop loss. Fourthly, set alerts. Every software out there has a way of sending you an alert when a stock hits a certain price level or certain actions happen. You should make sure that you have alerts on that company or on that chart so that you are aware of what is happening. Fifth is take profits when you can. You need to take that money when you get it. If you trade an option in the next week later, you're up 100, 200, 300%, make sure you're taking at least a little bit of that profit so that you're securing some of those gains. Do not try and hit a home run every single time. It is not worth it. You need to think of this as the long-term gain and think about consistency. Last thing is, I just made a trade yesterday for Aphria Cannabis here in Canada. It is doing extremely well, so I want to show you a little demonstration of what options can really do for you. I'm going to show you what my account looks like right now, so stay with me. Okay, so here's the PowerPoint. Let's go to my holdings. So I'll refresh this just so you can see everything. And so as of right now, I've got Canadian and US holdings. So in my Canadian holdings, I have Air Canada here. I have 8 contracts, and right now they're up $2,500 or 16,000%. The reason it's 16,000% is because I actually took out my entire initial position, my entire initial investment I got out, and this is 100% pure profit. And then right below it, you can see here Aphria Inc. This is the option that I purchased literally just yesterday, and as of right now, it is sitting up 68% or $852. So I'm doing extremely well on it. I bought 30 contracts at a price of 40 cents when I bought in. The last price today was 70 cents, so I bought it at 35 or 45 or whatever it was, and right now we're up 68%, so we're doing extremely well on that. I also just sold my Shopify options at 130%, so I'm going to try and put those videos in this course, but stay tuned because this is doing extremely well, and in the next couple of videos I'm going to show you how to price the options as well as how to buy them and as well as how to put that stop loss in. So lots of different things coming up here. Definitely stay tuned and pay attention, but manage your risk because it is the most important thing you can possibly do, and make sure you understand what you are getting into when you make these trades, because if you make the wrong trade, you make the wrong quantity, it is going to cost you dearly, and it's a simple mistake that you could have prevented by just knowing what you were doing. Talk to you soon.